Hey everyone, Couch Investor back to another video for today, and I think this is a first on the channel talking about Uber. Uber, of course, is a household name already, a bit like Netflix, whereas Netflix, if you talk about streaming, probably that's the first name that pops up. If you talk about ride sharing, taking a ride home, probably Uber is the name that pops up. Of course, there are competitors out there, such as Lyft. Now, during the years, Uber has been in the spotlight for many reasons, mostly negative, right? Burning cash, controversial CEO, and then some scandals with regards to the drivers. There are also some new laws with regards to contractors, etc. And then you had the pandemic. During the pandemic, the business was obviously hit quite hard because why would drivers drive around during the pandemic picking up random people? Just didn't make sense. But Q3 of this year, the report was actually quite okay and might actually show us a path to profitability. Of course, we already know it's free cash flow positive, but overall on a GAAP basis, still losing money. But there are some things to consider that only happened once, or one-time charges, etc., which could mean that maybe in the next quarter or in the next 2 quarters, we might actually see a profitable Uber. Of course, with the current macro environment, things can change, for sure, but keep an open mind as we go through this earnings report. Now, before we do so, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. All right, so let's first start with the key numbers here. So monthly active platform customers grew 14%, nice. Trips 19%, and then here pay attention. Gross bookings is up 26%, revenue is up 72%. Now, if we look at gross bookings, that grew 26%, while monthly active platform customers only grew 14%, which means that the existing monthly active platform customers are now spending more on the platform, which is great. Same users, spending more money. So, good for the future. Now, of course, we would like to see this number continue to grow as the platform grows. And also, by the way, it's not just Uber ride sharing, it's Uber Eats, it's Uber for alcohol delivery. Didn't know this as well, but a nice surprise there. Now, of course, the company is still losing money, as you can see here, $1.2 billion, but it improved quite nicely year over year. Now, there is a reason why this is still in red. So first of all, stock-based compensation. So that's an expense of $281 million last year and $482 million this quarter. Now, there was also this little headwind right here. So net loss also includes a $2 billion net headwind pre-tax and a $512 million net headwind pre-tax from revaluations of Uber's equity investments in Q3 2021 and Q3 2022. So let's say if you were to remove those one-time charges, of course, stock-based compensation are not one-time charges, but you would like them to you would like them to decrease over time. But let's say we take them out, right? So we're reaching here approximately $1 billion, which means net loss would have been $200 million, which is very, very close to being profitable. Of course, we just remove stock-based compensation and this one-time headwind. But let's keep that in mind in the next coming quarters. Now, of course, the same thing can be said here with net cash from operating activities. As I said, free cash flow positive and from operations as well. So yes, it did decrease 30%, but as you can see right here, Q3 2021 benefited by a net amount of $1 billion as a result of significant cash impacts related to a legacy auto insurance transfer. So, quite good. And last thing for this segment here, free cash flow positive. Yes, yet again, of course, same story here in 2021. And now breaking down each segment for gross bookings. So mobility grew the most, 38% year over year, delivery 7%, freight, and that grew quite a lot, but that's because of the acquisition of Transplace. So the year over year comparison here makes no sense, but overall 26% growth year over year. Now, if we look at revenue, revenue is what comes after all the gross bookings. So revenue, mobility, number one here, 73% growth, delivery 24%, freight, again, makes no sense to calculate that. So overall, it grew 72% or 81% year over year on a constant currency. Now, they do say here that with mobility, they have this extra, well, they benefited from the net amount of $1.1 billion from business model changes in the UK. And like I said, freight here, number three, it's thanks to the acquisition of Transplace, so the contributions are added there. And then as for take rates, which again is very important for the margins of the business, take rate increased from 21% in 2021 to 28.7% in 2022. So far, so good. Of course, until they can't prove the market and probably shareholders that they can be profitable without those one-time benefits or one-time hits, it will always be, well, viewed as a little risky. Of course, right now with the current macroeconomic environment, high inflation, etc., it is still pretty nice to see this growth year over year. Again, granted, 2020, 2021, there were still some pandemic fears. So of course, the year-over-year growth could maybe be a bit overblown. But overall, as you can see here, assets, cash and cash equivalents, it has increased that cash pile year over year. So there's no going to say here, oh, they're losing way too much money. No, they actually increased their cash pile. And now going back up for the outlook for Q4. So they expect gross bookings to grow between 23 to 27% on a constant currency basis, with an expected 7 percentage points year over year currency headwind, translating to a range of $30 to $31 billion. Again, in the current macroeconomic environment, growing bookings 23 to 27% year over year, to me is quite nice. And then they expect adjusted EBITDA to come between $600 and $630 million, which, as you can see here, is a nice little increase quarter over quarter as well. Of course, last year, lots and lots of losses for delivery, for freight as well. And then a huge increase for mobility, 65% increase year over year, actually. So pretty big there. That's why I say, yes, year over year, those numbers might look extremely good. But you have to take into consideration that in 2021, well, coming out of the pandemic or still in the pandemic, but maybe at the end of it, the business did take a huge hit. So the year-over-year comparisons might look extremely nice, but you have to look at the whole picture. And so to conclude, I obviously don't own any shares of Uber, but I'm sure some of my viewers do. So do share your thoughts down in the comments below. Do you think this is a pivotal point for the company? Let me know down in the comments below. Overall, financials are improving, being free cash flow positive and cash from operations as well. Increasing that cash pile is very, very important, especially in the eyes of investors. Of course, there are still many, many questions to be answered, but overall, today Uber is in a much, much better position than it was a couple of years ago. And that's probably a big plus. Now, of course, do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye-bye.